We will. And good morning, and we are live. Welcome to another Telling It Like It Is. My name is Jade Alberts, the founder of Pure Guidance. We are a purpose before profit group of entrepreneurs trying to help entrepreneurs. Sharing knowledge and stories is why I started Telling It Like It Is. It is live. If you have any questions, plop them in there. If you're watching this after the fact, please put questions in there that you have, and we will answer them. I would also like to thank our sponsor for the next few weeks is Helm Cash Flow app. They were our guests last week. They make it easy to predict your future cash flow balance, and it is very important to manage your cash flow as a startup. So check them out. Just shortly, their app or their website will be in the comments section. But I am excited today to have Jacques LaPonite on Telling It Like It Is. Jacques, how are you today?
I am great. Post-COVID, as we talked about before, so I'm all good now.
Well, isn't that the truth? We're post-COVID, and we were saying that you ended up you're coming off it, and you're healthy and good about it. I've been around almost 800 people over the last handful of days or weeks, and I never got it. So I don't know. I don't even know if it's real.
Yeah.
I know it's real. I'm just teasing. But yeah, I mean, it's something that I'm glad you're feeling better. So that's good.
Yeah.
So what we'll do here is I'll give a brief introduction, and then we'll get after it. So Jacques is a director of Metiquity Ventures and former president and co-founder of Adabotics. He was also senior investment manager, board member, board observer, active advisor, and influencer for early stage venture capital into tech companies with 5 portfolio company exits. He's also co-led over $43 million of investments into early stage tech companies. Prior to investing 13 years of launching and managing innovative technologies into global markets. He has completed numerous product launches and had issued 4 patents to complete an acquisition and a disposition, and built numerous industry consumer partnerships initiatives valued at almost $500 million. And those are the biggest numbers I've ever thrown around.
Sounds great.
Which is awesome, and it shows like how passionate you are, how successful you've been, and obviously as the co-founder of Adabotics. I kind of want to touch on that before we get into the Metiquity stuff. So, how did you come about co-founding that company, and how did that help you build and found Metiquity?
Yeah. Well, it's kind of an interesting story in a way. When I was on the investment side, we'd look at hundreds of businesses and business plans every year, and, lots of people coming through the revolving door. And Adabotics came as a concept from a couple of guys that walked in. And, at the time, they had a demonstration kind of unit built in a garage, and but it wasn't really a company because there was nobody working full time. They didn't have any cash in it. No intellectual property established yet or anything, or in application. And so I had tons of questions, and, it's a big system play because there's a lot of capital required to build these big robotic systems. And so, lots of skepticism on my side, lots of questions, lots of advice. But, when companies would come in, I'd give them advice, kind of like you, it's like you're here to help. And so a lot of those questions, a lot of advice kept going back and forth. And then eventually things changed, and it was like, okay, things are looking pretty interesting. Okay. They wanted me to help them raise some money. Obviously, I felt I could do a little more than just that. And we got engaged, and I joined. And, it was a great run in many ways, because we, started out as 2 and went to 4 and 8 and 12 and then 30, 45 and over 100 in 3 years. Right. And so it was a big run, but I also kind of killed myself because, from day one, I've always been paranoid about cash flow and paranoid about validation. And so from day one, I'm chasing down investors and writing business plans. I wrote over 20 different versions of a major business plan, but bringing in investors, bringing in industry partners, doing all this in a confidential fashion because we had a secret that we wanted to share carefully and expose to the right people. And so we had banks and industry partners, prospective clients that, I was reaching out to early, and over a period of, 3 years, raised over $20 million and set the foundation for the next funding. And so ultimately, I took some money off the table. And so fast forward now to Metiquity, the benefit of Adabotics was really around credibility, because I felt like my background and experience on the investment side, and having brought, new products to market through different companies, and, initiated patents and different things like that. That experience was really foundational for um, running a startup. And in particular, on the investment side, I lived the life with, a dozen other companies, as well as sitting alongside other investment managers who had a dozen companies. And so we, replayed the horror stories and talked about all the goods and bads. And so those foundational things for me were the critical part for setting up Metiquity. Adabotics gave me the opportunity to create more credibility, in the sense that I was now also co-founder as well as an operational person inside, developing the strategy and raising the money and things like that. So being on both sides of the table is really important, I believe, for investors to want to invest in you, but also for portfolio companies and startups to, I don't want to say respect you necessarily, but when they hear you talking, they feel like you're coming from a basis of something substantial. And so it's that sort of balance of the commercialization, the investment side, and the co-founder that I think has really helped us launch Metiquity, and create the credibility for the founders that we're investing in, as well as the investors that are coming into the fund.
I think that's a really interesting point you just made about, you being on both sides of the table. I mean, I haven't had too many guests on here that have had to do that, right? I've been saying, now we've created a fund. We did it. I had to raise money. I've raised money. I've helped other companies raise money. And now here I am handing out the money to, companies that are now pitching me. Obviously that helps. And you mentioned that you think that the entrepreneurs respect you more because they know where you're coming from. Does that give you a different perspective, like when you're diving into a company, because of that?
Yeah, it totally does. Because, I always talk about looking through the lens of an investor, right? Because the investor is seeing hundreds of companies and hundreds of business plans, and you have a different perspective. Like, you're looking for a value proposition with the right mix of things that, you can see through to success. And it's sort of like when you see lots of businesses, you can tell the difference between teams. You can tell the difference between the stage of where they're at, how much work they've got to do. So it really does change your perspective when looking at companies. Now, I'll say the hard part, though, is that I can look at a company or a technology and say, oh, I can see how to make that work. But it doesn't necessarily mean that that company has got the right plan to actually make it work. But I feel like, the opportunity side catches me sometimes, because it's like, okay, great idea, great initiative to get this started, but can you take it, the long mile to get through to, several rounds of funding and to customer traction and, growth, right? That's the real challenge. It's not the ideas, it's the execution.
Well, absolutely. And I mean, obviously Metiquity, and Brian's been on this show, and he's probably watching. Hi, Brian. And, I've got to spend a lot of time with him over the last 3 weeks, but I know you guys love to be that first money in. You do a lot when you're vetting. You're probably the most impressive reports I've ever seen when you share your reports on why you invest. So, I mean, why do you think, or why do you like being that first money in, and what type of, what type more risks is that, and how much more vetting do you do if you're going to be first money in rather than, let's say, seed money in?
Yeah. I mean, I think there's a bit of a perception that because a company's in revenue means they've figured it out, because I believe that investing at any stage is risky. It's all about the next steps, right? Because if you're investing in a growth company, well, guess what? They got to grow 30% every year or something. So when we get into vetting, obviously we focus a lot on the team and can we work with these people? So, that's paramount, of course. Yeah. But, what's truly important from my perspective is, if it's an early revenue or pre-revenue company, we need to see line of sight to that customer, right? And so that may exist already in some kind of relationship with the company or pilot trial or something like that. But we like to see that customer, like if you took Caterpillar, for example, you want to be able to see that there's a good reason that they would buy it based on the value proposition, based on there's some dysfunctionality or some problem that they're dealing with or need to overcome. And so you can definitely relate to that. And so that customer, you can see them as a buying customer. So we look carefully for that. We also see them as a potential future acquirer of the technology and or the company. So, when we vet, we're also looking for key attributes like that, where companies have the opportunity to be working with key customers, key client areas, but they're also potential acquirers. So that's an important attribute. But also, line of sight for investors. So will other investors see this as something investable? So we're vetting these things when we look at them. We do a lot of the standard due diligence too, focus on the product, what stage it's at, how much cash they're burning, is there really truly magic in the product? Is there intellectual property? All the standard things. But, I would argue that having that right focus and that right relationship that's building with a key client or, pilot trial or something, because then we can come in, and our focus of coming in early is we'll structure the deal, we'll make sure there's good agreements with the founders. We will try to bring others into the round because we're not necessarily taking the full round. So we do a lot of that, and we want to come in early so that it's foundational, both in terms of the relationship with the founders, so that we become a close advocate for them, an advisor throughout the process, but also, making sure that the company continues to be investable throughout the process. So that's some of the things, we can talk forever on that alone, but
yeah, we could. Again, I'm talking with Jacques LaPonite, the co-founder of Metiquity. You can just jump on their website to find more about them in the comment section. So when you do invest in a company, I know some are a little more hands off, and I know us at TNT, we try and stay involved, the people that want to, and be there for them, and pick up that phone when those founders do call or need a little advice, because we've walked in their shoes, some of us. How hands-on are you guys? Are you just like, okay, here's X amount of dollars, or are you like, what, your out-of-botics background, your things, it's got to be valuable insight for the companies that you invest in.
Yeah, so we're meeting with them regularly. We want them to come with their updates, but also come with an ask each time, right? Like what are they currently struggling with? And it's through those opportunities that we can dive in. Like not everybody has built out a contract with a pilot customer or something. And so what we'll try to do is we'll dive into those specific issues. Sometimes it's hiring. They're just not sure how to structure the compensation for someone with options and salary, and it's a senior role they've never had in their experience. Maybe they're hiring a chief operating officer. So we are in the weeds. We will look at contracts. We will advise on those things. And sometimes people will say, oh, how can you do that with a lot of companies? Well, you stagger, and their growth trajectory is also staggered. So their issues come at different times. And then we also get the companies together, and they talk about, okay, well, I'm raising money soon too. And, how are you approaching it? And so we do a lot of that help. But again, it's about give us an update, tell us your problems, tell us where you're needing some help, and, we'll sound things out with them.
How valuable is that for the entrepreneurs? If I know, obviously, if everybody says, you ask them, oh, I need money, money's going to solve all my problems, and as we both know, it doesn't. So I guess, would you think that the advice and the guidance that you're giving some of these people are more valuable than the cash that they may receive?
I believe so, because I often say to companies that there's hundreds of ways, and I know I said it to you when we had a coffee a while back, but there's hundreds of ways to chart a path forward, but there's thousands of ways to screw it up, right? And you can go down as a company, you can go down some rabbit hole on one issue and consume a ton of time and even waste some money. And so when you can avoid those pitfalls by sounding your issues out with others that have been through it, or that have a perspective, or that can connect you to someone that has a perspective on it, then you can save a ton of time. Because if you're trying to accelerate and you run into roadblocks, you could take extra months, if not years, by making mistakes. So I do think the advice is valuable. Can't say we're perfect and know everything, but in the industry, there's lots of squawkers, right? They're like seagulls. They squawk around, say a few things, drop a few things on you, mess up your face, and then move on. And they're not there necessarily for the duration, where that's what our role is.
No, and I think that's, I mean, I always talk about that. The people that you're going to meet and the advice that you may get is going to be more valuable than any money that you may receive through Startup TNT on that end of it. Like I truly believe that, and I think we're in tune on that, and it's good. I mean, and I think we're a very collaborative ecosystem, and we do that. All right. I mean, one of the things that I love is that I don't want money to get in the way. And I get a little pissed off when I see people charging and doing things like that. And startups can't afford to waste money as you commented on earlier. But that kind of, it's funny. We had this kind of question planted, but somebody has just asked it, and it's about Alberta. And then I said, that collaboration kind of dives into Alberta, and we have been, scaling and investing. We have so many great startups in here, but I would love to get your opinion. And as per the question, why should people invest in Alberta and the companies in Alberta?
Yeah. Well, excuse me. It's kind of interesting because, if you look back 10 years, 15 years, the whole ecosystem has changed significantly. Startups still have struggles trying to find investors and trying to find people to put money in their company. But when you look at Alberta, we are a highly educated population. We've got the highest per capita number of engineers and scientists. We have the highest per capita number of millionaires. We have a low cost of living, low tax, and the opportunity for a stable workforce in this environment is so much better than the Valley. That's why some of the companies are coming up in the Valley, or even Toronto and Ottawa corridor. So the people are key, and is a very entrepreneurial spirit. But also what I've seen over the last 5-10 years is the increased amount of focus on the early part of the ecosystem, where you have more accelerators. There was a point in time where people were saying, oh, another accelerator, my goodness, what are we going to do? And now you have people sort of saying, oh, we have another group raising funds, raising a venture fund or an investment fund. And that's not a bad thing. That's signs of the ecosystem maturing, right? And it doesn't mean the gap for funding and the gap for expertise is completely solved. But as soon as you start getting that ecosystem development, where groups like yours, groups like ours are starting to coexist and work together, that's a great sign. So I think the people, the environment, and layer on top of that, Alberta right now is bringing in a lot of money from oil and gas. They're not reinvesting necessarily in new projects and new infrastructure, but they're certainly pouring the cash in, and that means more entrepreneurs, more millionaires, and more money going into government coffers. And those government programs, I think this is the decade where the government programs are going to be sustained in the early stage tech ecosystem, whereas in the past they've kind of ebbed and flowed.
Yeah.
And I do think the environment is really solid for Alberta.
And I've been lucky enough to be on podcasts and talk to ecosystems all over North America and even in Australia and Europe. And the one thing that I hear is that nobody is like the prairies out here, and I'm going to lump us into that a little more, and not just Alberta. But, and you did touch on it, right? You're going to be along with money. Maybe it might be with MCAP, or maybe it might be with Thin Air or TNT or right. Someone else. I mean, there is that collaboration of funds to help these companies happens all the time.
Yeah. And you know what? I don't think, I know for sure at our stage, like we're focused at a different asset class than a lot of funds, because a lot of funds are focused on revenue or some kind of growth metrics. And we're earlier than that. But we're not losing deals to other investors. We're not competing with other investors. We're more likely collaborating or co-investing. And, that's a sign of the gap still in the ecosystem, but it's also a sign of the opportunity. And I think as you go up the food chain or the revenue chain, there is more competition, there is more expertise. And so, that's why we see the opportunity. And you're right, the prairies, Saskatchewan, Alberta, like there are opportunities that are emerging that are incredible.
Oh, and And you got that you got that vibe, I guess it would have been last week, right, at Uniting the Prairies in Saskatoon, where they bring in 150 startups and 150 investors type thing, and just collide worlds and set up meetings. And and the one thing that I loved about that, and the last two I've been to virtually, and is that they're setting up these meetings where we'll meet a company from Manitoba's of the world, and that where chances are you just wouldn't meet them anywhere else, right? And then I'm having a meeting with them, and I'm like, hey, oh Jesus, Wilson, Chris, you got to meet these guys, or somebody, right? Like, these are right up your alley. They're more ag tech. I mean, you got to meet some of these investors right here, and you're setting up those meetings, and then before you know it, the follow up meetings are set.
Exactly. Yeah.
Yeah, and I mean, and I love that. I mean, that's something that I brag about all the time on this show and wherever I go, about the collaboration. And people are like, oh yeah, sure, it's not like that. And I say, oh man, it is like that. It's, someone will send me a deck and they're asking for $2 or $3 million. I'm like, well, that's way out of our realm. But here, I've got some people that might be interested in that world, whether it be the Tribunes and things like that. So it's not, oh, we're going to hide you until we can get you. It's like, no, let's try and help you get that money now.
Well, and interestingly enough, too, a lot of the entrepreneurs who are investors in our fund have the same mentality. They've said, hey, I'm interested in investing. I'll invest with and alongside you. But, when there's a company that needs my expertise, like, I'd be happy to meet with them and talk with them or share contacts or, help them find their way in certain avenues. So, there's definitely that give back and collaborative kind of approach. And, we certainly thrive on that ourselves through our networks and try to connect people. So it's good.
Well, let's talk. Let's put a little crystal ball on that question. And like, where do you think Alberta is going to be in maybe the next 5 to 10 years?
Yeah, I think it's going to mature to being much more like the likes of Vancouver, Ottawa, Toronto region, in the sense that there's a diversity of investment groups throughout the value chain of a startup's journey. And I do think that there's going to be a more active angel investment community, more educated, because people are working more collaboratively together and not just blindly writing checks because they, know somebody's, brother-in-law or sister-in-law who's running a business. So I think it's going to be a much more mature ecosystem, and with a greater diversity of support all along the way in terms of investors, accelerators, and help groups. So I think it's going to become an emerging place to be. And I think we're on the front end of that curve right now.
That's funny you say that, because I hashtag the place to be all the time. Oh, goodness. That's funny. And that's not planted. You just said that.
Yeah, cool.
Exactly. So let's get back to Metiquity. I know you guys are raising again. So what's next for you?
Yeah, so we're pretty much steady as we go. We're doing a new investment this month. It should close this month, so that'll bring us to 6 investments. We continue to work with the companies. We continue to raise funds and invite investors in. So it's pretty much steady as we go. A lot of our strategy was to invest in a few companies to help people understand where we're focused, how we're focused. We share due diligence with other investors and prospective investors in our fund. So like you said, most are pretty surprised when they look at our due diligence and the depth of it and what we're looking at and how we've engaged with the companies and founders. So, those are the things that we're doing. So we're steady as we go for Metiquity.
No, that's great. And I mean, obviously, Helm is one of them. I've had Neil on here. I've had Brendan on here. So it's, I mean, a lot of your companies I'm a big fan of too. And they are good companies, good people. So that is something. And again, if anybody wants more information about Metiquity, just click on the comment section in the website and they'll be able to. If you're looking for managing your cash flow, Helms is there, and they'll be able to help you out there as well. Or you can go watch the episode from last week and Kelvin can fill you in on what he does.
Yeah.
But yeah, so, I mean, I'm always sad when these conversations come to an end, because this has been such a enlightenment, and having, your expertise and your knowledge of both sides of the story, so to say, from, being a co-founder of Adabotics, to raising money, to now handing out money, to, writing business plans. I mean, you've kind of run the full gauntlet of the ecosystem, which is absolutely priceless. And I really appreciate you coming on here and sharing your knowledge. And I know when I ask this, you're going to probably have 50 answers for it. And we could probably do a whole episode on the advice you can give on each section. And maybe that's an idea for the next time we talk. But if you had one piece of advice for a small business startup or entrepreneur, Jacques, what would that be?
Yeah, like you said, that is tough because, I do prescribe to, there are hundreds of ways to chart a path forward as a company, and there's thousands of ways to mess it up along the way. So, I think there are a couple things that I would stress. One is to have your company and the way you're focused on your company in your mindset, you have to have a position of strength, right? You always have to be in a position of strength. And what does that mean? That means, like, you don't raise money when you're out of money. You raise money when you have money. So maybe you've just, secured your first angel round, and you took in $500,000 or something like that. That's the time to start talking to the next set of investors. That's the time to go aggressively at customers. And when I say position of strength, I mean, it's everything. It's like, okay, we've got, $500,000 worth of grant applications out there. That's a position of strength. So then you talk to your investors and say, look, I need your money to get, 50 cents on your dollar. So let's put $500,000 in. Position of strength is, you're with a customer. So how do you make that customer engagement better in a contract, or in the relationship, or, evidencing that you've got progress, so that you've got that progress to share. And a lot of that comes with, and this is the dual part of it, is when you're looking at your business through the eyes of an investor. That's usually a blind spot for most companies, because they're not an investor. They're an operator. They're an inventor. They're, somebody that wants to grow this idea into a business. And so when you're looking from the lens of an investor, you're always looking for those things of momentum, for those key things of proof points. And if you're constantly putting those proof points together, you're showing investors, partners, etc., that you have a viable opportunity. And so those would be kind of, it's that position of strength, but also looking at it through the eyes of an investor.
No, I love that. And I think that's so true. And I love your hundreds of ways to move forward and thousands of ways to mess it up. We should put that on a t-shirt. And
well, unfortunately, it's not a reflection on the people, right?
No, absolutely.
It's just,
yeah. I mean, and I've seen probably 1,000 of those, and you've probably seen more than that. I mean, it's not a bad thing to you mess it up, as long as you kind of fail fast and move on and learn from it, right? Yeah. There's nothing wrong with those failures.
Exactly, as long as they don't cost you millions or years of work or whatever, right?
Yeah, well, that's that is very true, right? So, but again, I mean, thank you so much, Jacques, for coming on today. I really appreciate you sharing your knowledge with our listeners. And again, we've had a few comments on the LinkedIn page, and I've tagged Brian on them, so we'll slough them off to Brian. Hey,
okay, well, hey, listen, I really appreciate you having me, and you're doing great things in your own capacity, so it's great to be part of it and great to be engaged with you guys. So
no, I appreciate that. Thank you for the kind words, and obviously big fans of what you guys are doing and how you do your due diligence and what you're doing into our ecosystem. So thank you very much. And again, anybody has any questions, if they're watching this after, put them in there. We will have them answered. And again, Jacques, I enjoyed this discussion today. I hope you enjoy the rest of your week, and have yourself a great day.
Yeah, you too. Thanks so much.
All right, everybody.